Hey, it's Rick. It's Thursday, December 28th. Only one more trading day left in the year 2023. I expect it to be very quiet again tomorrow, so not much will change, I don't think. So we'll start here. I have the equal weight of the S&P 500 up here as usual. And then my color coding is basically price in relation to the major three moving averages, and weather conditions are green, and green just means you should be pretty much 100% invested, and if you're a trader, you start increasing your position sizing. When conditions are yellow, you start reducing your exposure, raising some cash, lowering your position sizing and your risk amounts. And of course, when we get to red, you should be all cash. Or if you're a trader, you're still probably pretty much all in cash, but your trades are small and your risk amounts are tiny. So we've had a really good run, showing you how this works. I mean, in this period down here at the end of October, I was 11% invested, which arguably is a little too much. But it worked out. When we went to green, I went to about 45% invested. Up into this period here around early December, first week of December, I got to 120% invested. I was using margin. And last week I began to scale back and I'm currently about 41% invested. And there's a couple of reasons for that, which I'll get to in a minute or two. I'm just getting a little more cautious. So, but for long-term investors, it's all systems go. No need to be thinking about raising cash quite yet. But things can always change. So let's look at this from a different perspective. I'm going to get out of this chart and go to the equal weight RSP. If I can find it here, RSP on a weekly basis, going back 2.5 years or so. So you can see we've been pretty much in this chop for a couple of years now. We haven't really even gotten back to the peak in January of 2022. But it's been a really good run from in the last couple of months since here in the end of October, 1st of November. It's been a really good run. It's been what we call an easy dollar environment. It's I pick anything, it's probably has a high probability of making money. But why am I getting a little more cautious? That's just one of the things I look at. Well, there's a couple of things. First thing is, if you've experienced this sort of a gain in the last 2 months, or you were lucky enough to have gains from back here in March or so and you hadn't sold, you're not likely to sell tomorrow. You haven't sold this week. The volume has been next to nothing. If you're going to pay tax, what are you going to do? You're going to wait until January. So I have a feeling that we're going to see a pullback in January. That could bring us down. This would be a great scenario. If we come back down like this and then stabilize and then start running back up again. Now we have the makings of a really good bullish environment. Right now, if you're going from cash right now, and you're thinking, where am I going to put my stop? I mean, your stop has got to go down underneath these 10 and 30-week moving averages, and that is from here down to here is about 7% away, 7.5% away. So, I mean, it's still within my 8% rule, if you like, but it's damn close. Whereas if we can get this kind of a scenario, You could get the same exposure for, say, enter at today's price. And potentially the stop loss is only around 4.5%. So, for long-term investors, that doesn't make any difference, but for more medium-term, and certainly swing traders, that can have a meaningful difference in your account. So the other scenario is that we just go sideways for a while base and then rip higher, then that's another bullish sign. So I'll be looking at this carefully over the next little while, whether I get back to being uber aggressive. Right now, I'm just scaling it back a little bit. The other thing that gives me pause is one of the things I track is the how many stocks are trading above their 200-day moving average. For any of you that have done any reading or have listened to me for a while, the 200-day moving average is sort of a big daddy. Nothing good happens below the 200-day moving average, and all the big gains are come after a stock is above its 200-day moving average. So right now, we're at about 67% of all stocks on the U.S. exchanges are above their 200-day moving average. For some of you that have been around, if you recall, I use this as sort of I won't call it a contrarian indicator, but it's sort of a watch out. I talked about this indicator, this chart last October, when the number of stocks above their 200-day moving average was down around 25%. And historically, this leads to a bounce. And sure enough, okay, right up this chart up here is the price chart for the S&P 500 equal weight. And if you just track my cursor, at the bottom here is exactly when the market turned around and has ripped higher. This whole period up here. The last time we got over 60% was in July. And look what happened from July through down to October, November. It went straight down. So I get nervous. Again, if you take the other peak, here was in January of 2023. It peaked at 66%, and then the market fell all the way back down here. So this is a pretty reliable indicator. The one period when it didn't work out like this was back in, when is this, 2020, when the number of stocks above their 200-day moving average was running in the high 70% range. And it stayed up there for a long time. And the market continued to go higher. And then as the number of stocks above their moving average started to decline, the market still continued to go higher. And then we had the market pulling, or the number of stocks above the 200-day moving average falling down to the 50% level here in August of 2021, and the market's still going higher. And it was around December 2021 when we're in this period in here. And I had signed up for Mark Minervini's service, and he was making the comment he has never in his 40 years of trading seen where the breadth, the number of stocks above the 200-day moving average was near historical lows, and the market was going higher. And he actually issued a sell signal in November 22nd, 2021. And from an S&P perspective, he absolutely nailed the top. So what was happening here that was distorting things is the effect of these, what we now refer to as the Magnificent Seven, Apple's and Microsoft and whatnot, were dragging. They were so overweighted in the market capitalization of the indexes that they were going higher, but all of the other 493 stocks were heading down. So, but still, that could happen again. So, let's say this is something just to keep an eye on. It's just an indication of what could happen. It's not a predictor, but it just that is just telling me to be a little bit more cautious. What I'd really like to see is the number of stocks trading above the moving average come down a bit, similar to the way I drew the previous chart. On the weekly, have a pullback, and then come higher again, and away we go. So that is that part of it. I think that's really about it. It's say it's been a really good run. All of these indexes look pretty much the same on a weekly basis. They're all coming into a lot of resistance areas over here. So it's going to be tough slugging, I think, for the first part of 2024 would be my guess. But that's not to say that there's lots of opportunity in individual stocks. But I think as far as the indexes go, I think if I was to make a bet, I would say that the major indexes such as the S&P 500, the QQQs, take a look at that, will all be higher in 2024 than they are this year, at the beginning of the year. And but hey, all forecasts are wrong, so we just go I just react to what's happening, as opposed to buy stuff on the hope that I'm right. So with that, I'm going to end it for there. Happy New Year to everybody. I'll keep my videos down to less frequency, unless some of you really want some individual ideas on stocks. Otherwise, I'm just going to, only if we're at a significant turning point, which we potentially could be in the next couple of weeks, will I put out another video. But if there's things you want me to talk about, from trade management, stuff to buy, so on and so forth, by all means, let me know, and I can do these more frequently. Cheers, everyone. Happy New Year.